Today, Bitcoin and Ether continue to surge. A Google exec blames crypto winter for the company's slowdown in revenue growth. And Jake Boyle of Caleb Brown discusses the impact of the UK's newest prime minister on crypto. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Major cryptocurrencies on the rise for a second day. By noon Eastern, Bitcoin jumped back above $20,000 and Ether surged to $1,500, but Solana fell slightly to $31. Today's rise in prices comes after solid gains yesterday, which caused a wave of liquidations of short positions on crypto exchanges. Investors betting against a particular cryptocurrency are forced to cover their bet by buying more of the asset, which in turn drives up prices. Okay, let's talk about the top stories. First up, sticking with markets, the so-called crypto winter is even impacting tech titan Google. Parent company Alphabet reported Q3 earnings on Tuesday, and on the earnings call, Google's chief business officer partly blamed the slowdown in revenue growth on reduced ad spending by crypto companies and other financial firms. Google's overall ad growth stood at 6% in the quarter. That was the weakest for any period since 2013, other than one quarter at the beginning of the pandemic. Now, the crypto industry has been hit hard this year as investors fled riskier holdings like growth stocks and digital assets. Bitcoin and Ethereum have both lost close to 60% of their value year to date. Next, a new poll reveals a majority of U.S. voters want more crypto regulation. The poll, conducted by the Crypto Council for Innovation this month, revealed that nearly 60% of the 1,200 voters surveyed think the crypto industry needs to be more regulated. Only 10% said it should be less regulated. Now, according to the survey, which was released Wednesday, nearly 60% of voters want lawmakers developing crypto regulations to prioritize fraud detection and market stability. As you know, crypto regulation has been a hot topic, especially recently, and although nothing has been officially implemented, last month we got a first ever look at the Biden White House's framework. Last, the Monetary Authority of Singapore just proposed new crypto rules, including strict standards for stablecoin issuers. CoinDesk reported that the rules published Wednesday include setting capital and reserve requirements for those issuers. The measures also want to ban issuers from partaking in other activities that pose additional risks like lending or staking. The rules come after a rocky year for crypto markets, which included several bankruptcies, such as hedge fund Three Arrows Capital, which reportedly has ties to Singapore. According to CoinDesk, the Central Bank of Singapore said in a separate document that it's considering measures to limit the activity of retail investors who don't have access to professional advice. All right, on to our main story. Sticking with the international arena, crypto-friendly Rishi Sunak has been chosen to be the UK's next prime minister following the resignation of Liz Truss last week. Now, as some of you might know, when Sunak was finance minister under Boris Johnson, he made it clear that he wanted to turn the UK into a crypto leader. Crypto World's Sanae McKeel spoke with Jake Boyle of Caleb Brown about what this new appointment means for the industry.
Yesterday, Rishi Sunak became the newest prime minister in the UK. He was previously finance minister under Boris Johnson, and he was sort of known for his crypto-friendly stances. Talk a little bit about what you think we should expect from him as the new PM.
Absolutely. So from a cryptocurrency standpoint, it's widely seen as good news. Ever since he's been appointed, the markets have rallied quite considerably. Whether it's a relief rally or not, we're yet to see. But the general consensus is the crypto market is in approval of this change. Given his background as a banker and also numerous occasions he's made statements saying, he supports Bored Ape Yacht Club over CryptoPunks. He's mentioned he has a basket of cryptocurrency investments himself. So at large, it looks like the industry is accepting this change, and they are also seeing him as being pro-crypto, which is a good thing.
Yeah, and among those things, his call to make the UK a, quote, crypto hub, which is, something we've heard in other areas of the world before. Where does the UK stand on the world stage in terms of adoption, and what still needs to be done to make the country that hub that he's calling for?
People in Parliament saying that we're going to move to make our country a crypto hub, or we're going to do this or that, it's kind of been said so many times now. Back in 2016 or 17, you would see massive market movements on the back of announcements of that nature. And now it just seems like another promise that is yet to be seen. So until material changes are actually pushed forward, then it doesn't look like investors are looking too far into it. But to the second part of your question about what are investors and what are crypto businesses wanting to see from this new change in leadership, I would say that predominantly it's about getting a solid baseline on what consumer protection means for this new leadership. More specifically, there are crypto businesses that are wanting to innovate all around the world, and a lot of businesses do want to stay in the UK. So what's really critical for our business and other businesses of the nature that trade 24/7 is knowing what is leadership in a country going to do to allow us to be innovative, to cultivate the creation of new products, but also ensure that consumers are protected. So that's what we're looking for, is clarity on consumer protection and clarity on what we need to do so that there's no gray area and we can just move forward and actually become a crypto hub in the United Kingdom, which I think everyone over here does want.
Sunak also proposed a UK CBDC, central bank digital currency, back in 2021. What's the latest on that project? And do you see that project from the BOE becoming more important going forward?
It's one of the more controversial parts of the crypto market's interpretation of whether Rishi and his move to power is a good thing or a bad thing for the industry. It's quite a controversial subject. Some people who are very crypto maxi or Bitcoin maxi, as it's often kind of coined, would suggest that government involvement with cryptocurrencies of that kind of nature is a bad thing. But then other people on the other side of the coin would suggest that, well, that indicates acceptance and adoption and integration of new modern blockchain technology to empower and liberate the way that investors and consumers use currencies, which is then a good thing. So it's the cryptocurrency space at large is not united on their stance on the idea of government-based digital currencies in and of themselves. Personally, for myself and our company, we do want to see regulation improve. We do want to see greater adoption. How it actually works out and what material changes come to rise, we're still left in the dark there. So we're patiently waiting to get more clarity.
Given the state of the UK's economy, the Prime Minister has a lot of other priorities beyond crypto, but what's your expectation in terms of timeline for the country to implement stronger crypto regulation?
Well, it looks like the autumn budget is going to be a major deadline, which is just on the horizon next month. So everyone's looking to see what happens there. Obviously, it goes without saying that there are bigger issues in the world, and there are bigger issues in the United Kingdom that need to be resolved first and foremost. The good news is we have seen some progress already. The bond market has stabilized. The US dollar and the British pound are no longer almost at parity, which is obviously a major concern for people on this side of the world. But beyond that, it's really just a matter of seeing what material changes actually do come. The November budget is definitely, personally, what I'm kind of looking at there.
Okay, that's all for Crypto World today, but we are back again tomorrow and we'll see you then.